Hey traders, want to see one of my favorite setups right now? Let's talk about Broadcom using the earnings hot zone. So, first of all, I love this stock. I own it in my long-term stock account and it has been absolutely phenomenal. And now that it has split, well, a while ago, but ever since then, we've been able to trade it much more frequently in the options market because it has a lot more volume and open interest. Let's go ahead and take a look. Now, looking at the stock, it has an amazing daily squeeze where it pulled back to the 50 simple. Boom, great buy point. That was one of my first entries. It traded up into 386, and I'm ready to trade this one again. You know why? Well, because after it pulled back, it was up today almost 3% at one point. And look at these stats. First of all, we have an earnings report coming up, which means that it's going to be entering the hot zone on 11/11. And if you look at the way that it's traded recently surrounding earnings, check this out. Last quarter, it gapped up 16.2%. Typically, when you have a move like that, people want to buy those shares before the report. On top of that, you have moves not only after the report, but before the report and then in the days and weeks after the report. So that means not just the overnight gap up that was 16%, but you also have a consistent trend higher. So check this out. If you look at the earnings hot zone, you see all of this green here. 21-day average before the report is 5.43%. Then you have the 8-day average before the report. It's up approximately 3%. And then look at this. This is the kicker. On average, over the course of the last 2 years, this stock has traded higher by almost 10% in the 8 days after earnings. And on top of that, it usually gaps higher as well. So that's why I'm trading Broadcom. If you want to join me, come into the Mastering the Trade room and I will tell you exactly what I'm doing with it.